Hey there. So in this video, I am going to be talking about shorting. So the other day, someone had asked me what exactly shorting was, and so I thought I'd make a video about that just to explain what it is. So in this video, I'll be talking about what is shorting. So before we continue, let's just go over some terminology here. So shorting or going short or I am short is when you are betting that the price will drop. So you are assuming that the price will go down. Now the other flip side is longing, right? That I wouldn't exactly say longing, but going long or I am long is when you're betting that the price of something is going to go up. So when we think of buying and selling stocks or bonds or commodities, gold, oil, and this specific example, Bitcoin, you would usually profit by buying low and selling high. So for the example is you buy one Bitcoin for $6,000 and you sell it for $10,000. Well, your profit is going to be the difference and it's going to be $4,000. So that's what going long means. It's when you buy low and then you sell high. Now we need to know this because going short is the opposite of going long. So I'm just going to talk about that now. Now, the only real difference between going short and going long is that there's just the added step, right? So if we go short, you're going to sell high and you're going to buy back low. So you're in essence still buying low, right? You're buying low, but you're buying back low and you're selling high. So how does that work? So let's take a look at this example here. You're going to first borrow one Bitcoin. You then sell that Bitcoin for $10,000 on the open market. So you would sell it immediately. And this is kind of the example that relates to the previous example, but uh, this is going short, but we're just going to use the same numbers. So you sell at 10,000 and at this point you owe the exchange one Bitcoin. So you've borrowed, right? You borrow one Bitcoin from the exchange. So you're not borrowing it from a specific person, but you're borrowing it from the exchange that you're trading on. You then buy back or you buy one Bitcoin back at $6,000, right? So you've sold it for $10,000. So you have $10,000 in your pocket, but you still owe them the exchange one Bitcoin. Now, of the 10,000, you're going to buy back one Bitcoin for 6,000, right? So you only need to fork out 6,000 out of that 10,000. You give the one Bitcoin back to the exchange and you keep the difference of what you sold it for and what you bought it for of $4,000. So again, you sell it on the open market for $10,000. You have $10,000 in your pocket and you buy it back for $6,000. So in essence, you're selling high and you are buying it back low, right? So this is when you short, you don't actually have it, you have to borrow it. So that's essentially what going short is. So when you go short, what's in it for the exchange? Well, when you borrow from an exchange, you need to pay interest on whatever it is that you've borrowed. For example, interest is 6% a year. Well, for that one Bitcoin that you borrowed, you would then need to pay back 0.06 Bitcoin in interest if you held it for 1 year. So your total uh, that you would need to pay back is 1.06 Bitcoin for or after that 1 year, right? So whatever it is that you've borrowed, you have to pay interest on that borrowed amount. So if you borrowed Bitcoin, you have to pay back in Bitcoin, not dollars or euros or whatever currency. It's you borrowed Bitcoin, you have to pay back the interest also in Bitcoin. So, what are the risks involved with shorting? Well, because it is crypto, there's many risks involved when it comes to trading, right? And again, because it is crypto, there's a lot of risks involved, right? But I'm not going to get into that. That this is more about trading itself. Now, the biggest risk to shorting is getting margin called or liquidated. Now, that's there. This is kind of a mouthful, but basically, what happens is the collateral you put up to borrow the coins gets taken away, and you're left with nothing. So, remember how I said you have to borrow, right? You need to borrow Bitcoin, but in order to borrow that Bitcoin, you have to have some sort of collateral. So some exchanges will say, okay, I'll let you borrow 1 Bitcoin, but I'm going to hold on to 50% of the value of that Bitcoin as collateral. And then if the Bitcoin price goes down beyond that, beyond half of what it is that you've given me, then I am going to margin call you or liquidate you. So basically, that's one of the greatest risks out there in shorting. In shorting, you only have a potential max profit of 100%. This is assuming it goes from whatever price it is to zero. So that's 100%. Now that's why it's kind of risky because your maximum profit is capped at 100%, right? Whereas if you go from, you're doing the opposite of buying low or longing, where you, or going long, where you buy low and then sell high, is there's an infinite possibility. You can go 200, 300, 400, in, it doesn't matter. It doesn't stop. Your gains can always uh, increase. But with shorting, your maximum profit is only 100%. So that's why shorting is kind of a little bit more risky. Now, if you're interested in what being margin called is, or margin trading, I've made a video on that, and I'll leave a link down below that you can check out. But yeah, let's take a look or a recap. So, in a nutshell, shorting is the same concept as buying low and selling high, but it's in the opposite order. Uh, so you buy, instead of buying low and selling high, you first sell high and then buy back low, right? But there's also the added step of borrowing what it is that you need to sell. Again, you don't have this to sell, so you have to borrow it, then you sell it, then you buy it back cheaper. All right, so hopefully this video has helped you better understand of what shorting exactly is. All right, well, anyways, I hope you found this video informative, and if you did, please give my video a thumbs up. If you have any questions or comments, please leave them down below because I do check the comments and respond to them. If you're interested in receiving notifications of my future videos, then hit that subscribe button. Other than that, thanks for watching, and I'll see you in the next video. Bye for now.